Hi everyone, this is Tommy Lackey with PowerInvesting.com, and today is March 6th, Sunday, and let's take a quick run through our top-down view of the markets using the Power Investing website. As always, we're going to start our review with the triple play charts, and I'm starting down here on the 65-minute, and today we're looking at it in a little different view at some charts that I've already marked up here. And as you can see here on the SPY, it's still the top performer, and it's held right at the 40 level, holding the RSI bull range, and actually put in a positive reversal on this 65-minute chart. So on the short term Friday, they had every opportunity to break things down, but they didn't. And on the SPY, now the QQQs are a little bit below the RSI bull range, and the 9 SMA is looking like it wants to move below the 40 level. That's the opposite of the nitrous. So if we do get a drop here, it lets us know there's a chance that we could get a very accelerated move to the downside. Same thing in IWM. It was holding up a little bit better here on the RSI standpoint at the moment. And it's also, like the others, I drew these blue lines in here kind of at the bottom of the volume value for all of these on the 65-minute charts under this time frame. As you can see, they really did hold up okay as we went into the end of the week, even though that they rolled over overall the last couple of days, and the week ended up pretty much flat on the SPY, down on the Qs, as we'll see here in a minute. This is not terrible. The bears had a good chance, but again, there's still a chance they can take us on down. We got a lot of headlines right now that we got to be conscious of. When we move up to the daily chart, obviously we're in a pretty strong downtrend across the board. You can see here in the SPY, pretty much we just continue to get lower highs in RSI. We did get a divergence here on the SPY and the QQQ on the daily. As we've mentioned, we did not get another one on the IWM. The IWM is showing some confluence, but again, this is just such a messy range. I don't think we can bank on much right at this second. It's still trying to hold up off those lows, make this back test or overshoot a successful one, but there's just a lot of headline risk out there, and there's a lot of risk to it at the very moment. Now, when we move on to the weekly chart, as you can see, I had drawn those lines that they were kind of sitting on from the value area on the daily, but on the weekly, it shows here how much below it the IWM is. So even though the IWM held up okay on Friday, it's still really the worst off, and that's the same thing showing in the RSI. The SPY is still in a bull range. The QQQ has moving through, and it's actually got rejected at 40, now heading back down in a bear range on the weekly level. And the IWM came back up and tested that 40. Looks like it's turning down, and its 9 SMA on RSI is below the 40 level as well. Again, the opposite of the nitrous, so we could get an accelerated move to the downside. It's not a for sure, but it's something we need to be paying attention for right here with the risks that are abundant at the moment. Okay, now that we've taken a look at the triple play charts and seen that there's really just a lot of uncertainty there right now, we could be turning back, but the markets are still overwhelming force says lower until proven wrong. But as we go into look at more of a global effect, we kind of work our way down our macro page, as you can see up here in the URL, and we look at the world ETF RS rankings to kind of see where things are. We've been mentioning that Middle East and Latin America have been the two leaders for quite a while. That continues. This week, I think Tyler posted a couple charts on the Qatar ETF, QAT, again, thin, but these guys are showing some good performance at the moment while ours are not. As you can see, we have to go all the way down to 53 to get the SPY as far as the rankings here. However, it did move up. Pretty good RS movers recently. And then you got to go down into the 48 range to get to IWM, and then QQQ is all the way down at 30 versus all these international ETFs. Again, we have 60 on this list, so we need to get those back up in the showing. However, unless you're going to go with some of these thinner areas, I mean, other than Brazil continues to be a top performer, energy-based, and so that may be an area, if we get any pullbacks or sideways moves, you can look for a new setup. IWM is just above China. SPY is just above China. Again, taking a look at some of these things, it looks rough in most places. as far as major developed areas due to all the geoglobal tensions. In the intermarket rankings, I'll put on the blog a few things that I kind of highlighted here. But it was interesting to me to see that TLT and IYR, while still towards the lower end, are both of our big RS movers this week. And IWM's move up in the rankings last week was very short-lived, or recently was short-lived, and now has popped back down to 12 as it got hit again this week. But, just the overall rankings, you're still commodities at the top. You got some of your bond stuff starting to move up a little bit. It says rates may be slowing, but your equities are all still at the bottom, not posing a favorable environment for equities yet. These need to move up this ranking list before we can start looking at that as a positive. On the size and style, you can see that mega cap value moved back up top and small cap value dropped back to the bottom, losing 33 RS points over the last week. That's probably the biggest reason that you saw IWM move back down in the intermarket rankings. As you can see here, as we go to the small side and the growth side, you still have microcap and small cap growth on the top. I guess the way to put it is on the top of the bottom. Value's still leading, and it's going mega down. But when you're looking at growth, you're starting to see small growth outperform mega growth. So we might be seeing some green shoots or some stakes being put in the ground with some of these things that have been decimated over the last few months. But again, buyers have to show up and prove themselves. When we move into the market cap ranking, the big thing that jumps out to me here, yes, utilities moved up 27 points. Has been a strong mover. But probably the one that catches my eye the most and has been this last week, one of two, is healthcare. And as you can see, the healthcare market-weighted healthcare ETF has now moved well up. And this is really the kind of color scheme you want to see here on this 3-month RS as it goes from 18 to 36 to 55 to 73, continuing to build its way back up this. Another one that jumps out to me is the real estate market. I definitely think with the idea that if rates are starting to slow or peak here soon, at least in the short term, that gives real estate a better opportunity here than financials. And I think that's exactly what we're seeing in these mega cap or these large cap RS sector rankings. Now, when we look at the equal weight, it's a little different, but it's about the same. Healthcare has made a bigger move, on this one, and the small caps it hadn't made as much of a move. And then your real estate that I was kind of eyeing, it made a pretty big jump this week, and so did industrials. Industrials have a lot of the defense names and all that in there, but they've also been doing good on the construction materials and all that kind of a scenario. Small caps are a little bit different a story. Again, today took a bigger hit. But when you look at it for the week, it's really selective. Energy up 13%, just a crazy week and continuing to be a crazy run for energy. But you're starting to see some of the other small cap communications and small cap real estate kind of perking up here. And you also had gains this week in small cap industrials. So those are some of the areas. But small cap healthcare is not really performing with the rest of healthcare. So again, from the healthcare standpoint, we might lean larger. And some of these other areas, like the decimated areas, technology, some of those things, as they continue, see if they start to perk. They may not, because if the multiples continue to compress, that's not going to be something that jumps back for us. All right, next we're going to jump over to our Power Universe page, as you can come under this main link. And you come down here and we look at our equal weight universe that we calculate ourselves of all the stocks that we use in the breadth charts, everything else, and kind of see how it's doing with some of the same chart looks that we see on the other pages. Now, as the universe scenario, you can see we still have the downtrend line we drew last week, and then we also have a situation where we go back here and just kind of put it under these lows, and you can see that's right about where the low was on Friday. So it's really trying to hold this ledge, but no proof yet that momentum or anything else is turning up. We can't call this a divergence, but we did have a higher low, I guess, in RSI, but we're continuing with lower highs, which has happened since the start of this entire scenario. So from a universe standpoint, it's still, guilty until proven innocent, as Brian Shannon likes to say, and pretty much has a lot to prove at the moment. Short term, we can bounce at any time, but right now that we're going to have to start to see this, especially here in the breadth, improved more than we did this week. All we really did was oscillate around and bounce around, and we made slightly higher lows, but ended the week pointed down, so that could get negated really quick as we move into the next week. We saw a couple good days, but it just did not make much of an indentation in what we're looking at here, and might be setting up another set of lower highs in breadth. We move down here to the universe comparative chart. again, the universe had been moving up against the larger cap and then small caps. It still continues to outperform, but as you can see here, it's flattening out versus the QQQ and turning down a little bit versus the SPY, which shows that the SPY is starting to outperform again, the large caps, the larger names, and we'll see about what happens here with this Russell or IWM ratio. On the right side, we're still in a situation to where we had the divergences before. Since we haven't made a lower closing low, we can't really call these divergences, but it's interesting to note that on all of these, as we kind of look here, these spikes down recently have come with the similar number of new highs continuing. Now, the spike downs are larger than the high days, so it's like we're trying to get a lot of areas, but you can still see there's still some very concentrated weakness hitting on some of these weak days, and we're not getting any big spikes to the upside. It's just kind of rumbling along or grinding along. We need to see, I think it's kind of starting to dishearten some people, and we need to see some positive action just to kind of attract buyers back to where we are. Now, the equal weight sector rankings continue to be energy, materials, utilities. Energy materials are just continue to kill it. Utilities jumped up in that over the last few weeks and has started to perform better as well. Again, not a real risk-on sign for the markets. Consumer staples is next. Like I said, my note and the things that I'm noting this week is real estate and healthcare too that jump out to me, and then industrials that are not already up on this top side. So we'll look at that more in the sector review. But in the equal weight, something I did want to note down here in the equal weight subsectors, going a little farther than we usually do in the macro, is that when I sort this by RS movers, we're getting some just consumer discretionary in here. We're getting these REITs that I'm talking about, 3 of the 5, I think, REIT subsectors we have in here. But we're also still continuing to see some things like consumer discretionary, household durables, retail, those kind of things keep up in the RS movers for the week, just because they didn't have a terrible week, but they're very low ranked and they don't look like they're moving up over any other time spans. So I'm concentrating a little more on the real estate. I mean, utilities still might be a good place to use. Water was killed, so it might be an area that could definitely have some mean reversion if people continue to get nervous. So this gives us a good review of what's going on in the overall markets. Like I said, I went a little deeper this week into the sectors and subsectors, but hopefully that gives you a good idea of some different areas that you might find fishing lanes in. Again, there's nothing wrong with just kind of staying on the sidelines until we start to see some more positive action, which would come as early as Monday, after we held up Friday, like I said, on that 65-minute chart. However, I would give it more than a few minutes to prove itself. We've had a lot of morning rallies that got sold off in the afternoon, and that's classic bear market action. So we need to continue to honor that until we start to see some of these things reverse and go in the opposite direction. Sell off in the morning and then buy in the afternoon and buy into the close would start to give us a little more of a positive view over the short term. All right, hope everybody has a great week, and we will talk with you next week.